Welcome back to Winning on Taxes. If you feel like you've been force-fed through a fire hose, sorry, kind of have today. It's just been a lot of information that's really important for people to know about and understand. So first of all, what needs to be reported on your tax return? All income. There are a few exceptions, but make sure you talk to your tax preparer, CPA, and before you don't report anything. That includes foreign income as well as income here in the United States. Um, if you don't have the tax information or you don't get it like you should, request it through your wage and income transcripts. IRS goes back 10 years. So you can get information going back 10 years. Again, if they file for you, that's why you would file older returns. And if you need to go back further than 10 years, you can go to the Social Security Administration. They have that information going back even further. It's not easy though, but again, that's where you would get it. So assets, generally in the United States, you don't have to report assets. You just have to report any income you get from them. So interest or if you sell anything, capital gains, you have to report that. Right now, you don't have to report if you own a business. It is a law that's on the books, but there's no teeth to it. It's not required. And so, but be aware that might change in the future. So talk to your CPA, talk to your tax preparer. They should be aware of these laws. This last one that we touched on, foreign reporting of assets. Sounds fancy. Let's simplify it. First of all, if you have an account outside the United States, if it's in an American bank, nobody cares. It gets reported. If it's not in an American bank and it's in a different country, all you have to do is report it. It gets disclosed on what's called an FBAR filing. So it goes with your normal tax return, gets filed at the same time. And if the CPA or tax preparer you're using isn't aware of this or they don't know how to do it, use someone else. We use excellent tax preparers and CPAs across the country. If you have a foreign account, use someone that knows about this and how to report it. So the reporting requirement is if you had $10,000 or more at any time during the year, and this is an aggregate. So if you have 4 accounts, each with $3,000 in it, that's $12,000. You have to report all of those accounts. So if you have 5,000 in Canada and then 6,000 in Mexico, you have to report all of the accounts because the aggregate, the total amount in all of those accounts is more than $10,000. And I had a case where it was a Russian case, someone deposited $10,000 and pulled it right back out. Someone died, so they put the money in his account just to hold on to it, pulled it out. He had to report. We were able to clean it up for him, so he didn't have to pay any penalties. But the penalties here can be as high as 50% of the asset. So again, it's very high. If you're not familiar with this, talk to your CPA, get a tax professional that can handle these issues and ask the right questions so that you can be protected and sleep well at night knowing that you've done all that you need to do.